Where on earth is Australia's property market going? We're going to be talking about interest rates, the economy, and Australia's property market, and where property prices might head over the next 6 to 12 to 24 months. Making those short-term investment decisions are not always in your best favour. You also need to look at the long-term potential of areas. Now, my name's Luke, and I run a buyer's agency here called Purpose Property, and we focus on the Southeast Queensland market. The reason we focus on the Greater Brisbane market is because I think Southeast Queensland has some amazing growth potential over the next 5 to 10 years. And that's why we focus our buyer's agency on the local government areas in and around Brisbane. So what on earth is going to happen across Australia? And is Brisbane the right choice for you to put your money? Or should you be looking at Perth or Sydney or Melbourne or regional New South Wales? There's so many options across the expansive Australia that we live in. So let's kick off with interest rates and where we're at today and what might happen over the next 6 months. As you can see, we've had that massive uptick in rates over a fairly short period of time, going all the way from 0.1% up to 4.1% for the RBA cash rate in a matter of months. Now, they've paused the rate for the last 2 months. So July and August 2023 have had a rate pause. And the real question is, are we going to see more rate rises late this year? Or will we have rate cuts in 2024? Now, my personal opinion is we may have another rate rise or two in the latter half of 2023. This is going to depend on what's happening in Australia's economy as well as the global economy and the impacts on Australia's currency and the wider markets. Now, it's going to be interesting in 2024 if they look to cut rates, because as soon as the RBA looks to start cutting rates, the market sentiment might change to dive back into the property market. Now, part of my job as a buyer's agent here in Southeast Queensland is chatting to people every day of the week. And if you're interested in having a chat with myself, you can head over to purposeproperty.com.au to book in a free strategy session. Now, in these free strategy sessions, we talk a lot about current interest rates. Now, I myself am paying about 6 to 6.5% for most of the rates across my entire portfolio. And thankfully, a lot of my portfolio is positively geared because we have lower LVRs around that 60-65%. And we've got some stronger cash flow assets in our property portfolio. For example, a unit block in Coffs Harbour in northern New South Wales. Now, for most Australians looking to buy growth properties, the yields might not be anywhere near as strong. They might be able to get 3 or 4 or even 5% gross yields. But after taking out all expenses, that investment could be fairly negative each year, taking money out of your pocket. Even after getting taxed back because of negative gearing and the benefits of depreciation, you can't hold too many of these negatively geared properties and build out a scalable property portfolio. That's why it's important to balance the capital growth and the cash flow as you're looking to build out your asset base. So where are the areas that you can find capital growth in 2023? Now, there are a couple of options in my opinion. I'd be looking to major regional locations that have continued growth potential. I think WA is still having a strong run at this point in time and has the last 24 months. I also think Southeast Queensland has some great growth potential over the midterm, so say the 5 to 7 to 10 year mark, as we look out to the Olympic Games and as people will flood back into the market when rate cuts eventually happen. In my opinion, Sydney and Melbourne are far too overpriced for value investing, but if you have that type of money, then absolutely go for it. So the way I would like to structure a property portfolio looking at Australia's markets is to diversify, go for those short to midterm areas in terms of growth potential, and then transition to cash flow assets. So what that means is you might want to buy homes with good growth potential. They may be negatively geared in the initial instance. You might be out $100 a week out of pocket, or $200 a week, or $300 a week, but you don't want to be too far negatively geared. Once you've got those strong growth assets in your portfolio, you may want to manufacture value by doing a cosmetic renovation or adding a granny flat or subdividing the property. Or you may want to continue to acquire cash flow assets. So once you've got those growth assets, then you might want to transition to buying more cash flow assets. That could be a unit block. It could be townhouses. It could be buying properties in lower socioeconomic areas that have higher yields at say a $300 to $500K purchase price rather than buying at a $700K to $1 million price point. So generally, in my opinion, at this point in time, both Perth and Brisbane look great. A couple of the major regional markets look strong as well, depending on their growth drivers. And in my opinion, you need to be looking at areas over 100,000 people. I don't like the idea of buying a $500,000 or a $250,000 asset in a town with 10,000 people. I don't think there's enough underlying economy there to support that asset purchase. Because in my opinion, at the end of the day, a property's value is based on the land value and the cost of building that asset. And a lot of these smaller locations have a lot of land supply around them. And so that's another major point you want to look into, is that there's scarcity when it comes to purchasing that asset. Now, here in my business where we're buying in Southeast Queensland, we're looking for established areas and established suburbs, and we really only buy established property. And it's also very important to look at both the quantitative and qualitative data when you're making an investment decision. Some of that quantitative data could be days on market, vacancy rates, average incomes, forecasting incomes in those areas. Some qualitative data could be the look and feel of the area. Where are the future transport and infrastructure projects happening? Are they building new major projects that are going to impact the jobs and the lifestyle in those certain areas? What are the school zones like? So you need to put together both the quantitative and qualitative data when it comes to making an investment decision. So the really interesting thing here, now we've talked about interest rates, areas, what's really going to happen with property prices. As we've all seen, interest rates have risen, but so have property prices. And the reason is people are willing to pull back on their discretionary spending, but not sacrifice building their investment assets or getting into their own home. And so this is putting a floor on the property market, as well as the cost of building going up significantly. I myself am going through a major renovation at this point in time, and if I'd done this project 2 or 3 years ago, I might have saved hundreds of thousands of dollars in labor costs and in material costs. But in the market we're in at the moment, because rebuild costs are so high, this is underpinning the property market. So in my opinion, at a macro level, I think property prices are going to continue to tick up, even with the rates on hold. The reasons are because of that underlying support in the property market and also the migration coming into Australia. We're seeing hundreds of thousands of skilled overseas migrants coming and getting jobs here in Australia and looking to secure permanent residency and eventually citizenship. And so they want to find a place to rent and eventually buy. We're also, for example, in Southeast Queensland, seeing a lot of interstate migration. A lot of Sydneyites and Melbourneites are coming up to Brisbane and up to Southeast Queensland for a better lifestyle. And that's continuing to push demand here into the Southeast Queensland market. So there really are so many factors that affect property prices and the property market. And it's important for you to remember that you need to look at both the macro and the micro impacts on your potential purchases. There's no point just keeping your eye on the cash rate. You really need to understand your personal cash flows and your ability to access debt. Your situation is going to be different to everyone else's out there. You're going to have a different job, different income, different goals, and different point of view and different risk profile. So you need to go out there and build your team. Find the right mortgage broker that can help you get access to the debt. Find the right buyer's agent to help you secure the right assets within your portfolio. Find the right lawyer, accountant, the list goes on. You need to build the team around you to help make you avoid those major mistakes and to help set yourself up in the best position to buy your own home or build your investment property portfolio. I think we're at a really interesting point in Australia's property market. We've gone through a massive boom out of the back of COVID and all the stimulus and funding that was pumped into Australia's economy, pushing up property prices. Now things have settled, the cash rate has settled, property prices are still increasing slowly. And what I'm seeing with my ear to the ground in my buyer's agency here at Purpose Property is an uptick in buyer demand because people are trying to get in before there's another rush on the property market if interest rates are cut in, say, 2024, 2025. At the end of the day, you need to make the right decisions for yourself and look at your very next step. Emily and I did this in building our own property portfolio. We bought property 1, we renovated, we rented out some of the rooms, we refinanced, and then we bought property number 2. You may have seen property number 2, which was the Baby Queenslander renovation series on YouTube. We again renovated for about $35,000, added value, increased the rent, and went out and eventually bought property number 3, and so on, in building equity and building the cash flow in our own property portfolio. So look at your very next step. Do you need to call the broker and work out and confirm your borrowing capacity? Do you need to find the right asset or work with a buyer's agent to find your next property purchase? It's important that you take that next step, not just consume all the content out here on YouTube and on the property forums and in property books. Go out there and take action. If again you'd like to have a chat with myself, head over to purposeproperty.com.au to book in a free strategy session. We'll sit down, have a chat about your situation, chat about what services we provide if you're looking to buy in the Southeast Queensland market, and leave some time at the end for some questions. So thanks for sticking around. I'll see you in the next one. Peace.